Well, good evening. My name's Tim Metcalfe, Managing Director of IFC Advisory, which is Tern's financial PR and investor relations advisor. With me today, I've got Ritchie and Sisto from Tern, and Darron Antill and Alastair Williamson from two of Tern's portfolio companies, Device Authority and Wyld Networks. We're also going to have presentations from Joe Halliday of Talking Medicines and Richard Vincent of Fundamental VR. Unfortunately, both Joe and Richard are travelling on business this evening, so they've kindly recorded their presentations as they couldn't join us at this time. So I'll be playing those. Following the four presentations, we'll have the opportunity for a question and answer session. I know many people have got questions they want answered, and I'd like to thank those who sent questions and observations in advance. But if you do have anything during the sessions, please use your Q&A button at the bottom of the screen, type in what you want to be answered, and we will endeavour to answer those questions at the end of the presentations. So without further ado, we'll start the presentations. The first one is going to be a recording from Joe Halliday of Talking Medicines. So if you can bear with me with the technology, I will.
Good afternoon. I'm Joe Halliday, CEO of Talking Medicines, and I'm delighted to be here to give you an update for Capital Markets Day on all that's been happening at Talking Medicines. I'm going to give you a recap of our positioning, give you some sense of an update as to where we are from a business perspective, and our outlook going forwards. So Talking Medicines is an advanced data science company. We use AI to unlock intelligence. That's information about how patients and how healthcare professionals speak about their medicines. So we believe we can revolutionize the healthcare sector with a different kind of intelligence. The problem that we solve in the market is that pharmaceutical companies, the people that create the medicines, have more prescriptions written than pills taken. So commercially, that means that the cost of poor adherence, and adherence is when people don't stick to the medicine as they've been prescribed, is a whacking big £250 billion. About half of people don't take medicines as prescribed, so it's a huge problem, both commercially, as I've just talked about, but also from a societal impact on health. So there's a big problem about people taking their medicine. As I said, more prescriptions written than pills taken. And what the pharmaceutical companies do is they spend a sizable chunk, £30 billion, on marketing to address that gap, to be able to talk to customers about their medicines, why they should be taking them, what the benefits of them are. Now, pharmaceutical companies and their agencies can access heaps, absolutely heaps of unstructured data about patients and doctors, but they don't have the systems to decode it. And part of the problem is that patients and healthcare professionals speak different languages. Doctors will speak a Latin, and patients will speak, what they see as normal language. So the two don't even come together. So being able to decode the clues about why people do and don't take their medicines, both from a patient and a healthcare professional perspective, is absolutely critical to addressing the commercial opportunity that I've outlined. For us, we can increase that productivity of finding the insight. So the insight is like a needle in a haystack, and we can lift that productivity by 80% using data science and advanced artificial intelligence. In the old world, advertising agencies on behalf of their pharmaceutical clients will be manually trawling through spreadsheets, filling in complex queries to try and extract intelligence from lots and lots of different sources, whether that's social media, whether that's research transcripts. So they're trying to paint a picture which is very costly and timely to pull. In the new world, we're Talking Medicines, we're using AI and data science to deliver the answers to the questions on what they want to know. And those answers are at their fingertips. So it's transformational technology in access to healthcare intelligence. In terms of the old world, where would that intelligence have come from? So Health professionals have been the bedrock of feedback, but as you can imagine, talking to one or two health professionals can be fairly biased. It's still part of the makeup of the feedback, but it can be unleashed in terms of the amount of health professionals that can be accessed through using AI. Focus groups have always been used by the industry, but can be very limited in scope. Very difficult to recruit the right people for the focus groups, so they can be quite limited in their nature. In-depth interviews are very, very good in terms of the insight that can be gained, but can be very, very expensive to run. And traditional social listening tools are broad-based. They're not sector specific. So it's very difficult for them to be able to unlock the nuances of healthcare. We use this example a lot. Heather is a plant, is a girl's name, a medicine. Which one am I listening to using a broad-based social listening tool? Without the AI classifiers trained to the patient and the HCP, it's very, very difficult for that to unlock the same kind of quality insight that we can through our AI. And a lot of what we're talking about here is how to take away the bias and how to take away the noise from the absolutely invaluable clues about how people take medicines and why those gaps exist on taking them. Our solution uses advanced data science and AI to basically access the conversational data and the insights within them. We call our solution Drug GPT. I'm going to show you a video in a second, which really brings that to life. And what we're doing is blending many, many sources of information. So they could come from the customers, it could be from research groups, they can come from open and closed communities in terms of social media, or places that doctors speak to each other or patients speak to each other. So we are very, very good at sourcing data, which will be raw and effectively dirty with lots of noise. We'll pull it through our models to be able to create a solution called Drug GPT, where our clients, the advertising agencies, can ask questions of the data. So what I'm going to do here is show you a video.
Welcome to Drug GPT, the natural language interface where you can ask questions of your curated data to instantly extract intelligence. There are opportunities to blend your data with further curated open and closed community data from authors such as patients, healthcare professionals, and influencers, providing a comprehensive view of the healthcare landscape. This brain represents our modeling that classifies and curates your data using advanced data science and artificial intelligence. The curated data safely and securely sits in your own vault. Let's see how Drug GPT is used. Customers can use it to analyze audiences with advanced multi-level sentiment and topic analysis to gain a 360-degree view on defined subpopulations. Analyze authors, whether that is individuals or groups of individuals, to understand their alignment to key messaging, used for speaker selection, advisory board selection, or KOL measurement. And analyze messages to extract intelligence on how well brand messages resonate with defined subpopulations, used to track ROI for campaigns, conferences, and launches. Drug GPT provides you with a single source of truth through data visualizations, text summaries, and natural language answers. Get in touch to drive your own efficiency and effectiveness in extracting intelligence with Drug GPT.
So that's giving you a sense of what we're offering to our customers, and they're paying a subscription to be able to access their data vault, the data they want to see that's then cleaned and classified in Drug GPT. So our advantage is that we are able to bring them this information, this intelligence across drugs and disease areas. Our models are pre-trained in-house, so we're not using their data to be able to do that, taking long amounts of time. We pre-trained our models to healthcare, and we're able to take that data in. We've got clear cleaning, classification, and labeling of data, which has come through our training, and we're ready to go. That gives us a competitive position to be the data partner, the AI data partner for agencies. And our ability to bring natural language access to the intelligence, to be able to ask questions within Drug GPT, gives huge advantage in terms of give me the answer and I see the answer immediately. We don't allow data to seep in or seep out, which is so important to our clients in terms of the security and the compliance. And it's an important point on our advantage. We didn't just add AI as a tag in 2024 because it was the cool thing to do. We have been an AI company for a number of years, and our models have been trained properly and intelligently to be able to make the most of what is now a very hot market. In terms of where we sit with our AI, we do on purpose sit at the top of the tree. So we're vertical specialists, which means that our pricing can hold up a higher value than the commodity end of AI. And we're very proud that, you know, all of our training and our specialist knowledge and our data science combined with life science means that we can really be the vertical specialist for extracting intelligence from conversational data. I've touched on this during the video and before that, you know, we bring data in from a number of sources. It tends to be unstructured and broad and messy. We put it through our AI, which includes natural language processing and understanding of linguistics. I talked at the beginning about patients and doctors speaking so differently. And it's delivered through Drug GPT, which you've seen an example of. So, you know, we have a proprietary system in terms of the way we process through to delivery of data. What we're doing right now, and we've been doing a lot of in Q1 2024, is really looking at who we can work with to advance our moat. You know, what makes us different and how can we protect that? So one example is our work with Social Gist. Yesterday we were in New York at an exhibition with Social Gist and Drug GPT to show that we can source open community data. So that's where people talk in open forums. There's thousands of places that people talk about their medicines and their healthcare. By working with Social Gist, we're able to bring that data in. We're able to clean and classify it through the AI models, and that can be served up to customers. So customers are trading up to be able to access data with Social Gist, and working very closely with them, as we've promoted on our social media, has been a big advantage for customers when they don't have their own data and they want access to that open source data, particularly about patients. The same on closed communities. We again have published in the domain about how we've worked with Sermo, who are an HCP community where healthcare professionals speak to each other. That data has huge value in terms of the insights about why and how doctors are prescribing medicines. So we've worked very closely with Sermo, and an example of this is a white paper that we recently published on GLP-1 medications, which have been, you know, very topical in the news around weight loss versus diabetes in terms of the use of these medicines. So we've done some great work, and we are really advancing our moat around our data sourcing through working with others and being able to offer that to our customers as an add-on. Our go-to-market is a subscription-based model. We're very much targeting the ad agencies who tend to be very concentrated in New York, which is a big advantage to us in terms of access to them. We also target healthcare data communities where they have their own data about patients and physicians, but they need the data science to unlock the intelligence. We have had very good traction in Q1. We're very happy with the traction that is happening, and that's about onboarding new customers, but also expanding within. Our customers are huge players, so there are many opportunities once we land within them to be able to expand. So good traction in Q1, and we look forward to updating more on that. And we're always looking ahead in terms of where the next adjacencies are. The benefits to agencies are, you know, absolutely zero learning curve from a modeling point of view. There's lots and lots of chat about hallucinations from AI. Our GPT sits on curated data. It doesn't need to make up. It only can extract intelligence about what is known, and that again is a big advantage. Our data is very clean. Our models are ready to go. There's no sort of learning time needed within client briefs. And compliance, ethics and governance have always been so important to Talking Medicines. We've taken our time to get it right on that front. We clearly differentiate competitors. We're not in clinical data. We're very much in this conversational data, and we're not at the cheaper end of the market in terms of pumping out the kind of commodity AI, and we're not social intelligence and social listening. So we feel that we've got a very clear place within the market that our customers are recognizing. As a team, we are laser focused on delivery, particularly of the commercial plan. We work very closely with Tern. Our Sisto is our chairman, and we have a number of advisors around us just to make sure we are absolutely making the most of 2024, where there are so many opportunities opening up around AI and partnership. Winning the AI award in New York that we mentioned in the last update has been a huge accelerator in terms of really breaking us into that network of ad agencies. And we continue to publish, and we continue to look to our patents in terms of the moat that we're creating. Yesterday in New York, we were presenting at an event, just an example of how we have been accepted. Elizabeth Fairley, also a founder, was speaking on stage about AI and Talking Medicines in front of our target customers, the agencies. And that's a huge accolade to be invited to do these kinds of thought leaderships, which really help us in terms of customer traction. So really, to summarize, we've had a really, really strong start to 2024. We're here in New York a lot. We're very close to our customers. We're very focused on that expansion, and that US customer adoption is so critical to the next stage. And we're doing a lot around the marketing and thought leadership to make sure that the word of mouth is as strong as we can make it. Our formula of a team dedicated to purpose for healthcare intelligence, plus our ability to curate and train those models, and a unique product delivery is the success that we're seeing. Thank you very much for listening. I hope you have a good evening, and I look forward to updating again in the future.
Well, thank you very much, Jo, for recording that. Time to move on to Device Authority, and Darron is thankfully with us in person this evening. Darron, I'll hand over to you to run through your presentation.
Thank you. Just checking you can hear me.
Can hear you very well.
Fantastic. Okay. Well, welcome everybody, and I guess hello again. Many of you have probably seen me present. I've attended a few of these sessions along the way, but good evening to everyone. So I've got, I guess, a quick update on the business. Clearly, we've had some change in the company in relation to new investors, and I wanted to talk about that and the difference that's going to make. But I guess for people who don't know us, as well, effectively the team, we're 30 or so strong. We're very much focused on the development side in the UK with go-to-market in America and clearly in Europe. And we have one outlier because we have a lot of interaction with India-based organizations that are often part of North American Globals who's based in Bangalore. We talked about Device Authority, being a UK limited company. We launched KSAS back in end of 2022. That was significant, KSAS being our cloud platform, and I'll talk about a bit why that's important. And I think along our journey, we've often talked about the value of strategic partners, and that still plays out today. And I've got a high-level update on where we are with that. Building out our product relevance and making sure we're adding new functionality. Much of this is really built in terms of a product-led growth strategy being driven by customers who are looking for us to accelerate and advance functionality. And I think in the past, I've talked about automotive, medical, and industrial sectors, and they still remain important to us. And now we effectively have two more evolving sectors, which I'll touch on around government and actually retail. But in terms of investment, I mean, clearly we were delighted to get investment at the back end of the year from 1011. 1011 is a significant cyber security specialist in VC specializing in cybersecurity companies. They have a great track record. They have quite a broad portfolio of cybersecurity companies, and the team we've met, and actually some of the partners we've met around the business in terms of how they've looked to help us already has been, quite significant. And just to touch on some of the examples, they have great access to CISOs in a large number of enterprises. So being able to, finesse our message, meet a number of the CISOs, not just at industry events, but one-on-ones has started to happen. Which I think is very significant for us as an organisation as the sort of IoT security challenge becomes a more topical agenda. They've got great assets and tools they've helped us with, but they've also really, I think, helped us in terms of it being able to expand some of our marketing activity and footprint just by the level of investment and focusing on that to consciously build and increase our pipeline. Typically in the past, our best opportunities have come from events, or they've come specifically from some of the social media activity that you see us. But now we've got some, specific sort of enterprise like the CISO-led initiative as well, funded and really supported by 1011. So, we look forward to that in terms of helping us build out our business. I also just wanted to touch on Prelude Partners, again, a cybersecurity vendor based in Salt Lake City. They closely follow 1011. So if you, in terms of the process, we had a number of people that were interested in the company, and I guess both 1011 and Prelude stuck out for me as the absolute top two. Hence, they chose us and we chose them. But what was really encouraging, it was, why did they invest? And they told our employees at a couple of kickoff meetings we've had, and I thought I would just share that with you because, they see like Tern has or does many companies, but at the end of the day, we have a team, a good team. We have a product in a market that they see is growing and is challenging. And our product is real because they tested it and spoke to customers. Some of those were prospective customers, so not just people who are deployed. They see real problems getting solved. And I think what I liked the way they describe real is, many people come up with new technologies that are very disruptive, that throw out the old, but come in with the new. And that can work in certain market phenomena. But I think in cybersecurity, where people have made significant investments and the threat landscape is, is somewhat increasing, you need to be able to work with the old because people aren't just going to throw out old investments. You need to evolve. And I think, the effort we've put into our platform to make sure that we are interoperable, I think became very apparent. So, that's encouraging to hear. So I just thought I'd share some of those things with you. But both Prelude and 1011 have joined our board, and new investors clearly have given us cash on the balance sheet, but it's how we spend it to grow our business and look effectively to at least double our ARR. And we're aspiring to triple it this year as some companies are looking to significantly scale, which is great news. But I just wanted to, I guess, acknowledge, Tern clearly has been with us from day one, and I've still worked closely with Bruce and Al. And I think at the end of the day, we wouldn't have a company without the efforts and the inputs from Tern in the early stages. And I think we got the company to a stage where we're then able to bring in, I guess, bigger funds and global partners. And so, I think we're absolutely going in the right direction. And, we're on a journey. And generally, there's a tremendous amount of energy and enthusiasm now in terms of inside the company with the employees in terms of our potential. So let me just skip on. I just wanted to touch on, I guess, what we do and why we do it really is because of this slide. So this is data from IBM and Verizon. Really, identities is the sort of Uber market we operate in, but for the Internet of Things. So devices typically that sit on the other side of the firewall. But human error is still the biggest issue, and around credentials is still the biggest issue. So automation or eliminating that human error is fundamentally what it's all about. And effectively, our platform is designed to do that in its simplest form. I've talked before, so just to try and give, I guess, a holistic view, there are a number of companies on the left-hand side of this chart that have dealt with human identities. Many of them have IPO'd and successful companies. Tomo Bravo and other massive PE companies have bought many of them recently in terms of ForgeRock, Ping Identity, etc. So there's a large number of companies that have scaled and have been solving the problem on the human and the machine side, for the last 20 plus years, machine side less so. But the IoT challenge is a whole different ballgame. It's devices that sit, as I said, outside of the firewall. Could be on an oil rig, could be in a car, could be a medical robot, clearly some of these devices connect to the enterprise, but they don't all. And so some of the organizations on the left are very much potential partners or potential competition in terms of how they look at whether they want to expand their footprint on the right-hand side. But what we're good at and what we do and what we're known for, and when you see some of the industry analysts talking about, it's the IAM piece on the right-hand side, which is really a foundation, for zero touch for automating around IoT device identities. That's what we do, and that's what our unique value is. Just to build out this slide, and I think I just wanted to touch, one of the pivots we've made in the last 12 months is really doubling down on Keyscaler as a service. So this is our cloud SaaS offering. Well, why? Because clearly it, solves some of the human error challenges, but it really helps people accelerate their projects. Because one of the, I guess, the friction pieces in the sales cycle was, whilst people were deploying in their own cloud, they don't always have access to the right infrastructure, the right skills. They would need to integrate our platform with others. And some large companies still do that because they've got the resources. So that will never go away. But Keyscaler as a service has been designed, effectively to get people up and running, faster. And sometimes this is really a very comprehensive trial. So a significant company, through 12 people at Keyscaler as a service, just to evaluate the functionality of our software over a 10-day period, which is a significant investment in itself. And so it shows our prospects potentially inside to the platform to how they could use it. But what we're really trying to do, and we're moving people, is to a cloud-based to accelerate the fact that they can roll out their projects and pay as they grow effectively across all industry types. And just to touch on the industries, and I touched on some of the verticals before, but I think, what's becoming emerging, and I think this has been driven initially from North America around some of the VIPC and the Virginia State and Department of Homeland Security funded projects, but, critical infrastructure driven by, fear about war, fear about, critical things that need to be protected, not just people's safety, but infrastructure safety. And this is becoming quite significant in terms, and the scale of budgets and some of the programs in that area are very significant. So our partnership model is critical there in terms of accessing some of those, funded schemes. And that is an evolving space. And now we're looking to replicate that in the UK. And we have, some early access points into the UK government and critical infrastructure, some of the programs over here, mainly driven by the Mission Link initiative that we're part of. But automotive is still very, very apt, a tremendous opportunity. We continue to get more logos and build our pipeline. Automotive takes not just the, the connected vehicle and people's safety, but it's also about how you really secure the supply chain. Securing the supply chain is a critical part in the automotive space. It's a differentiator, but also necessary. Medical and healthcare, still an important sector, but the SBOM, or software bill of materials, driven by some of the compliance and White House orders, is becoming more topical. And it's not just really the creation and management of an SBOM, and that's in itself, there are other companies that do that, but it's how can you validate it and trust that that SBOM is coming from a trusted device? Well, that's what we do, and that's coming out in our product to provide that extension for people. So medical is an important part. Industrial and manufacturing always has. That got hit, when COVID came in terms of some of the challenges of those companies, but now we very much see that back on. And smart connected factories is definitely a significant theme, and we've seen some significant projects come into our pipeline. It's a different set of use cases, but Keyscaler is designed to be able to manage some of those. So we see that as another opportunity. And then the final one, retail and logistics. And I think, this has been really the last few months. And this often is where people are building their own IoT applications. So like they are in the other verticals, they're looking to connect devices, could be point of sale, could be in stores. But it's also how they manage, aggregate, protect their data. And again, many people are looking for their supply chain and how they engage with their supply chain from a secure perspective. And we've got a couple of really exciting opportunities and potentially new partners that are in the fold working with us there. So the future is bright, in security, and you see some of the presentations. Security isn't really sexy when you see it. You know, it fundamentally solves the problems. If it does its job, you don't see it. So unfortunately, I don't have such a great video like Joe had earlier. Let me just talk to the partners, because I think this is often a topic of conversation. And there's a bit of detail here on some of the partners that I just thought I would share. But, you know, Microsoft has been and continues to be important. Specifically, you saw an announcement where they pulled together a number of vendors, some that we're already working with, which is really dealing with this sort of industrial manufacturing sector, which is the largest significant part that includes automotive in the way that they go to market. And we're a key partner there, solving a number of challenges. And independently of that, we were dealing with CyberArk. And we are just about to conclude, finally, the technical integration with CyberArk. We've done our piece, they've done theirs. They're building out their go-to-market, and they're going to be launching this to their Salesforce at their CyberArk Impact, which is their global kickoff in May. And really, CyberArk, you know, what they're looking to do is allowing their customers, going back to that chart that I showed you a bit on the right-hand side, allowing their customers who already use CyberArk for enterprise privileged access management, how will they do that for IoT devices? And they see us as the answer for their IoT devices and the use cases that attach to their platform. So we've built, you know, again, an integrated UI so that their customers can use CyberArk and connect to Keyscaler. So we're excited about that opportunity. Entrust continues to be important. Clearly, they've been quite acquisitive, and they are building out their cloud story, which fits perfectly for us in a number of areas. So we've got a number of initiatives to effectively plumb in to their backbone of their cloud offerings, which is very much the way that a large number of these traditional identity enterprise companies are going. And Argus Security, just to touch on, I think is exciting and new for us. They're very automotively focused. We solve a problem for them specifically around vehicle to cloud. They've seen what we've done on some of the other automotive customers. And I think with the support of Microsoft and CyberArk, that's coming together nicely. And they're starting to pull us into new opportunities. I touched on VIPC, and why everyone thinks, well, that's DHS funded. That's it's been funded for 3 years and now got an incremental 4 years that kicks off next month for a number of projects. But it's now starting to bleed into some of the commercial based opportunities, such as Capital One Arena. So that's quite exciting for us as well. So we kick off a POC with Capital Arena in terms of next quarter with VIPC sponsorship. And I guess, you know, things do come around. It's interesting, PTC, that was almost the first partner that we engaged with pre-Microsoft. They are definitely seeing the challenge, again, of security of connected devices and connected factories. They've acquired companies like Ketware, who now have some significant challenges in their industrial base, which they can see us solve. So again, there seems to be a new momentum with PTC, and clearly one of our previous investors, Venify, and again, another enterprise company. Interestingly, their two biggest sectors, one being finance, which isn't topical for us, but retail is an important sector for them, where they deal with like 19 of the top 20, and they're very closely watching what we're doing in a large retail, and that's going very well. So we hope to open up a new opportunity specifically into the retail space, and a lot of that could be with Venify. So really, those are our primary partners that we have what I would call technical integration, good executive alignment, and we're building out go-to-market. We, of course, have other partners, and I know some of you see them on our website where we have technical integration, but some customers want us to be able to connect to a DigiCert certificate or a Global Sign certificate. Those are just technical things that are capabilities to enable our platform to do its job. They are not what I would call the true go-to-market partnerships. The ones on here are. So hopefully that explains that. And I thought I would just touch on the persona. So one of the things we've done recently, and persona really is about your target market, who you want to speak to. And I think, you know, as the opportunity effectively is growing and it bleeds into the rest of the organization, I just wanted to touch on. So we look at it really in 3 ways. Of course, you need C-level sponsorship, which could also be the business owner, but typically it's a CISO or sometimes it's a CTO that shows interest. But in most cases, digital transformation projects will normally have one or both on the operational or the security side. So the reason I touch on that, because these are the people we target. These are the type of people we look to speak to. This is who we try and address our message. It isn't typical of standard enterprise IT selling. It's very not typical of that. But I just wanted to touch on these are the type of people. And these are the job titles or the functions that, you know, people have either bought from us or that talk to us. So this is all based on proof and reality, not theory. And just building out, just to touch on our business model, and whether it's Keyscaler or Keyscaler as a service, it's the same product. One's our cloud service, which clearly we're delivering direct, albeit we do have the ability to white label that to partners, and we do have some of those conversations where people would look to offer it as an extension of their offering. But fundamentally, our business model is subscription. So it's really building ARR, creating that value. And this year, as I said before, we'll be looking to double, if not triple our ARR, really, and that's going to be down to the extent, not just of new logo acquisition, but how they move forward to production. Production is where scale comes. When they start rolling out to thousands, they have of devices, they have a significant problem that they can't do with their teams and their people, and they have to solve it in real time on a regular basis throughout the life cycle of the product. And we've talked like McLaren cars, for example, and others. Those, they keep manufacturing new cars, and that continues to build as a customer. And that's just, that's one good example. The medical devices that roll out. Sometimes people have devices in the field, or they're bringing out new products, and so that subscription builds as companies scale. And last year we signed a 5-year contract with a leading medical company, and they are only now going to production. So all the business we've done so far is to really advance and accelerate certain things they wanted to do. And they now have up to 12 divisions that are looking to engage and buy into that platform that's their IoT application, and then connect the multiple of different devices that solve different problems, whether it be in hospitals or other healthcare facilities. And so, the success of that project clearly could be lucrative for us, but that's down to their success as they look to roll out those medical products. And the beauty of our solution is, we're retrofit, so we can deal with in-field as well as new products. But subscription is the key. People buy a license, they buy for the base license, they buy an incremental per device license. And for the future products that we'll be adding in as extra functionality, there will be an additional license that people will pay for. And I think the final point on this I wanted to make is, you should definitely think of us as agnostic. I go back to the 10-11 point. We work just because of the way we built our product and the way we allow people to interact with us through our APIs. We can work with any device, with any cloud, in any CA. And some of the opportunities we see, they might have gone down the route of choosing one of their incumbent. And I can think of a retail example that chose one of our competitors, their corporate PKI vendor, Digicert, to solve the problem. And whilst they, were talking with us as well, and they went down the Digicert route, it's delayed their project a year, and now they're back in a single vendor scenario because they can't solve the problem, because they can't plumb into any device or any cloud and deal with any CA. And it's quite important through software that you're able to do that. So our agnostic approach is important and will accelerate deployments, and and is a very simple simple thing to say, but hard to do. But we've made that investment, so that's one of the big reasons why customers buy us. So just to touch on the competitors, and there's a lot of detail here, which I guess I apologize for, because there's quite a broad range of views. Traditionally, our competitors are PKI, CK or CA vendors. So some of the enterprise people like Digicert or like Global Sign EC. But in many cases, we have customers who've already made those investments, and they want us to be able to deploy and manage their certs for some of the IoT use cases. So they're at one level our competition, but they don't really solve the problem. Other organizations like Keyfactor, where they've got a cloud-based solution, are also our competitor, but then they don't extend to some of the other things I've talked about, like data security or SBOM functionality. And so understanding the use cases and making you solve the real end-to-end problem is important. Secure by design vendors like Crypto Quantique, so where people are looking to build into hardware. That might solve the problem for one customer, but typically people have many devices they have to manage, connect to their application, and dealing with hardware does not work. Customers do not overcome that problem. So again, they come back around and think, how do we deal with the software? And then they come back down, come back around to speaking to us. And then you've also got, in the market where certain analysts refer to detect and respond or cloud IAM vendors, where they can't really distinguish between corporate, that bit on the left again of that slide before, and industrial IoT. And we're effectively the extension for those partners that really want to try and solve that problem. So at one level, they could be collaborative partners, or they're our competition. And that's why we selectively pick who we work with, where there's, that joint effort. And where we win and where Keyscaler's value goes beyond. It's not just about PKI or certs, and you hear a lot about it in the market, but often that is a landing or beginning conversation. But it's how do you do that through the life cycle? Adding incremental, innovation, like being able to do things at the edge. So as people are scaling their organizations, being able to deliver functionality at the edge is crucial, especially for manufacturing industrial use cases. We talked a lot about authentication, but how do you effectively provide continuous assurance for devices? So Keyscaler AI is just going to bring another level of continuous assurance and authorization for devices, where we'll be able to spot anomalies or change of behavior of devices, so people can apply that to policy-based decisions. And I've mentioned SBOM functionality or enablement before. And the final point is DDKG. You may not know, but we have unique patented technology. All of our most valued customers use it. We can use alternative methods, but they just aren't as secure. They aren't able to deal with some of the really unique challenges. And often, again, once people understand how they can deploy DDKG as a software onto the devices, that becomes very compelling, very sticky, and they become very important customers to us. And I touched on the vendors before in terms of the enterprise vendors who are building out, their IoT offerings. So you see Microsoft, Entrust, CyberArk, and PTC. So that's really the landscape. The competitors and why we win. And then finally, I guess just holistically to give you a view. So typically we would have talked about Keyscaler, which we've now renamed as Keyscaler Central. That's what we had in the past. We built out our cloud SaaS offering consciously for customers because people want to deploy and buy a SaaS model. It's exactly the same, but it's a SaaS model delivered directly by a device authority. If people want to deploy it in their cloud, they buy Keyscaler Central, and then they can either add Edge, and soon they'll be able to add the AI functionality that I touched on before, and it has all the enterprise plumbing as part of that suite. So come the end of April, you will see us next month make an announcement of extending out our product capability with additional licenses, and there will be effectively a full suite for people. We've got a few customers now who are looking to add in the Keyscaler AI functionality. And again, this is driven really by customer need and customer demand, and it gives us that AI hook that we've been looking for as well. So we're excited about the advances making in the product. You'll see some announcements that include us refreshing the website, focusing very much in the industrial space, providing a great foundation for us really to kick off into Q1. And we've got some very exciting, what I would call large, significant logos looking to going through POC now and going to production and scaling by the end of the year, which I think will make a huge difference to the company. And these names are well known in the industry, and I'm sure many of you all know them. So we look forward to getting those customers through to production and really changing the outcome for device authority. So thank you very much, Tim. I will pass back to you.
Excuse me. Thank you very much, Darren. Much appreciated. Now time for our final presentation, which is Alastair Williamson from Wyld Networks. So Alastair, I'll hand over to you.
Thanks very much, Tim. Well, good evening to everybody. Let me just share some slides. So hopefully you can see some slides. So I want to spend about 15-20 minutes just talking about Wyld Networks, what we do, what problems we solve, and also talk about some use cases and some recent successes. So what's the problem that we actually solve? Well, 46 billion IoT sensors will be deployed every year by 2028. So that's a huge number of IoT sensors getting deployed globally. The problem is that only 15% of the world's surface has access to the internet, and that's traditionally terrestrial networks, so mobile networks, Wi-Fi networks, or terrestrial LoRaWAN networks. So there's a big problem. How do we provide connectivity in that 85% of the world's surface where a lot of these IoT sensors are going to be deployed? And that's what we solve. So we leverage low Earth orbiting satellites to provide 100% global connectivity, specifically for the Internet of Things. And more importantly, our whole concept is being able to offer our customers an affordable solution for them to connect their IoT devices to the internet anywhere in the world. And a recent report came out from McKinsey's actually basically stating is that someone can solve this problem. It could potentially boost global GDP by $3 trillion by 2030. And the key drivers here are the need for data. There's a massive explosion in businesses, organizations looking to collect data, and they're looking to collect that data to do two things. One is to increase their operational efficiencies and lower their costs, and also to meet their sustainability goals. And a lot of conversations we have with customers are pretty much dual purpose. They're talking about operational efficiency and lowering costs, but they're also talking about how they can meet their sustainability goals. To give you an idea of the total addressable market for Wyld, it's about $4.3 billion by 2028. So that's the market that we're actually looking to get into. So we were founded in Cambridge in the UK. We got 31 staff members at the end of Q4. We listed on the NASDAQ First North, July 2021, and on the OTCQB in the US in 2022. And our whole concept is being a virtual satellite network operator for the Internet of Things. So we partner with satellite operators and provide a complete end-to-end solution. So we're working with Eutelsat, Lacuna, DEWA, and Astrocast, and we'll be adding to those satellite constellations throughout this year. So we've got a large order backlog at the end of last year. It sat at about 94 million krona. And recent updates over the last couple of months is that we launched our S-band capability. So our existing product suite works in the ISM band, which is in the sort of 900 frequency space, but we've actually launched an S-band product that's up at the 2.4 gigahertz space, and that was really all about providing a solution that can deliver more data. So it allows us to go from very, very low bandwidth use cases to higher bandwidth solution use cases using the S-band product. We've started to ship product, so we're getting product into our customers' hands. And also this year we launched Wyld Fusion as a standalone platform, and I'll get into that further through the presentation of why we did it. But basically this generates an additional revenue stream for Wyld. Also, we launched a collaboration with SpaceX, which is really exciting for Wyld. That's both a commercial collaboration and a technical collaboration. I'll get into more detail on that further into the presentation. And also, over the last month or so, we basically delivered the European Space Agency project, the ESA project, which was also a pretty exciting project, and that was all about, that was working with a university in Italy and also with Thales Arianespace. And that's all about how Thales Arianespace want to look at how to use Wyld's technology to mesh satellites together. And it's not just significant for Thales, but it's obviously going to be significant for a lot of other satellite operators, where we can basically mesh satellites together in space, so reducing the latency of communication between ground and Earth by basically sending data to a satellite that will look for the nearest satellite to the ground station, send the data in space to that satellite, which would send it back down to ground. So it reduces latency, which is really important. And also, it's pretty important in ensuring you've got uptime. So, you know, your data is continuously flowing, and we're meshing those satellites together. And in turn, what that means is we can actually reduce the number of satellites that are required, because, you know, Elon Musk's talking about, he's got about 12,000 at the moment. And he was talking about going up to 40,000. Well, we can mesh satellites together, then he can significantly reduce the number of satellites he needs to put up there to create his network. So how does it actually work? Well, there's actually three parts to the product, to the solution. There's the hardware piece, which is on the left-hand side, which is the Wyld Connect modules and terminals. Those devices connect to sensors, and when a satellite passes overhead, it sends the data to that satellite. And when the satellite passes over a ground station, it sends a satellite to the ground station, which is connected to Wyld Fusion. Wyld Fusion is our provisioning, data device management and payment platform. And that platform basically collects the data and then passes that data to our customers, who then visualize that data and take action on that data to make informed decisions. And that's where our data service comes in. But I'll go through the revenue model in a minute so you can get a full understanding of how we actually make money. So, as I said, there's the hardware piece. There's Wyld Connect. That's a piece of electronics that can be embedded into a sensor. It's pretty small. And we charge our customers about $49 per module. We have an order backlog at the end of last year of about 235,000 of these devices, and we're now shipping those modules. And we have the Wyld Connect terminal, which basically does a very similar thing to the module, except it's connected to a IoT device, either wired or wirelessly. It's not actually embedded into the IoT device. It's got a lot more features built into it on managing power consumption, and it also has a lot of more computational capacity in it to do some more things. And we basically sell that product for up to about $499, about $500 a terminal, and we have an order backlog of about 4,500 of those, and we're shipping them. Then we have Wyld Fusion, which is our management platform, and we developed Wyld Fusion to create our complete end-to-end solution. But as I said a bit earlier, we also launched Wyld Fusion a few weeks ago as a standalone platform, and I'll get into that. Basically, our customers pay us an access fee to actually be able to utilize Wyld Fusion, and that's a monthly subscription fee that they pay us. And they pay us that for our complete end-to-end solution, but they also, as a standalone, they pay a subscription fee as well as a connection fee. And then there's the Wyld Data. The Wyld Data is the pretty important part of our offering, because that's where the customer actually pays us a fee to use the network. And based on the ISM band product, they pay us up to $5 per module or terminal per month to actually use the network. So, as I said, we've got about a combination of modules and terminals, about 240,000 of them to be which are being shipped. And once they're all fully deployed, that will basically generate a revenue of up to $1.2 million per month. And that's really where the revenue will come from. So our model is very much similar to that of a mobile operator, in that you pay a one-off fee for the hardware, that's your mobile phone, and then you pay a monthly fee for each phone to the operator to actually use the network. So our model is very, very similar. So just to have a look at some of the use cases, obviously, because we're looking at providing connectivity in that 85% of the world's surface where there's no access to the internet, and in many cases, there's actually no electricity. So, our solution doesn't require external power. We can basically deploy our devices into the field with battery backup and solar panels, and they will stay in the field for 5 to 7 years. So our focus is agriculture, energy, which is oil and gas, the utilities, logistics, and also the environment. We've had a lot of success in agriculture and oil and gas, and we're now starting to see some real big business coming through in logistics, in tracking containers and understanding collecting data in respect to the contents of those containers, particularly with perishable goods. But also we're starting to see some other new use cases coming through in livestock tracking, particularly in Latin America, and in Brazil in particular, where the government has basically passed a law where all livestock has to be tracked. And I can go through some of those use cases a bit later on. So yeah, if we just take one of them, we have a customer, Trevere. They're into forestry protection. This is a specific use case. They've got a sensor where they deploy onto trees in the forestry business, and they basically have the Wyld module inserted into or embedded into their sensor. And if you look at Brazil, there's over 500 million hectares of forest in Brazil, so it's pretty big. And these sensors basically collect data on the health of that tree. So it looks at water content, it looks at girth. And by utilizing these sensors, forestry companies can increase the productivity or the yield of timber by up to 30%. And you can imagine in a market that's worth $322 billion last year, by being able to actually increase your productivity by 30% is really adding some significant value to forestry companies. So that's one example of a use case. Bayer is another customer of ours, and it's interesting that what we're helping them do is basically collect data to manage beehive health. And the rationale behind this is pretty important because 30% of all global food produced is actually produced by pollinators or created by pollinators, and there's over 100 million commercial beehives around the world, not including the non-commercial, which is basically, the smaller organizations managing their own beehives. But the commercial operation on beehives is pretty massive. There's over 100 million of them. And so we're deploying devices onto these beehives to measure the health. So it's collect data on the weight, content of water, content of honey, but actually just manage the health of those beehives. And that's pretty important, not just in the production of honey, but also in the fact that if you take California alone, every year over 30 billion pollinators, bees, are transported from all over the US into California to basically pollinate some very, high cost crops. And that's a lot of beehives moving around the world. And so, Bayer is looking to ensure that the health of those beehives is ensured throughout not just the transportation, but also during the pollination period. And if we look at how much, what bees are responsible for, they're responsible for over $15 billion worth of crop in the US alone. So they're pretty important for us. And we're making a lot of inroads through Bayer and getting this solution deployed across a lot of hives, in particular in the US itself. And then there's another one, which is soil moisture sensing, this is a customer we have. This is in South Africa, actually, but it's interesting in that 70% of all fresh water is actually consumed in agriculture. And, it's a significant chunk of fresh water being used in agriculture. And 30% of that water is actually wasted by potentially people over irrigating because they don't have any data to understand when they should irrigate and how they should optimize their irrigation. And that's what we do. So we deploy our technology together with soil moisture sensors that collect data on the moisture content or the water content of the soil so that you can actually optimize your irrigation and reduce the waste of water. And with the work that we're doing, we've already demonstrated that we can reduce that waste of water by over 50%. So that's 50% of that 30% that's wasted, we can actually reduce. And also we can, by using our solution, giving farmers data, we can actually increase the yield of crop on the same footprint by over 15%. And there's an example. That's a farm in South Africa. You can actually see it's brand. Our customers got his logo branded on the terminal, but that's a soil moisture probe in the ground, a terminal, and the top of that pole is actually a modem, and that sends the data to satellite. Another one that I wanted to talk about is IMAE, which is a Brazilian company, and they're basically deploying next generation wind turbines, and they're using our technology to collect data to optimize the collection of energy from wind power. Now, if you take Brazil, their power requirements are about 90% met by renewable energy. So they're pretty high up there in the top 10 in the world. And they're rolling out a significant number of not just large turbines, but what they call next generation commercial turbines, which really are there to power farms rather than just wind generated farms. And this is really this use case is not about the volume of wind turbines, but it's really about the amount of data that's required to be collected. And we're working with IMAE and deploying these throughout Brazil. But I wanted to go back a bit to the soil moisture sensor use case that I talked about earlier. It's really a large use case for us. There's over it's 5 million soil moisture probes deployed every year. That was last year, and 5 million were deployed every year. And to give you an example, we have another customer, which is British American Tobacco, and they contract out to about 90,000 farms, and they're looking to put about 4 soil moisture probes into each of those farms starting this year. So it gives you an idea of the size of the scale of soil moisture connectivity and probes. It is pretty large. And given that we're now providing our customers with the ability to collect their data anywhere in the world, that number of soil moisture probes is really going to accelerate greatly over the next few years. But I talked earlier about the launch of Wyld Fusion as a standalone platform. So you can see our end-to-end solution includes, Wyld Connect terminals and modules, satellites, and Wyld Fusion. And we developed Wyld Fusion simply the fact we couldn't find another platform that supported both terrestrial connectivity and satellite connectivity. So we actually developed Wyld Fusion for that application, combining terrestrial connectivity and satellite connectivity. And we use it ourselves as part of our own solution, but we also launched this year Wyld Fusion as a standalone platform, simply because we had customers that came to us and said, well, we want satellite connectivity, so we're buying your solution, but we've also got a terrestrial connectivity, and we want to put our terrestrial connectivity onto the same platform. So it made sense for these guys to look to start using Wyld Fusion as a standalone solution. And we have several customers that have already connected their terrestrial devices to Wyld Fusion. And that's growing pretty rapidly. And we see it as another revenue stream for Wyld. And to give you an idea of the size of the markets, so there are terrestrial IoT platforms out there. Siemens, PTC, SAP, IBM, Microsoft, you can go and buy a terrestrial IoT software platform. And the value of that market in 2023 was about $8.2 billion US, and it's set to grow to over $17 billion US by 2028. And now we believe, and we know this because we've done a lot of research, is that we have the only combined satellite and terrestrial platform. We'll support both terrestrial networks and satellite networks. As I say, we already have customers that are migrating their terrestrial devices onto our platform as a standalone, and then they're looking to add the satellite connectivity from Wyld as they move further through their journey. We have a few customers already connected as a standalone, and we also are working with one customer to look at getting about 1 million terrestrial devices onto the Wyld platform as a standalone solution. So we obviously continue to market Wyld's end-to-end satellite IoT connectivity solution, but we are also now marketing Wyld Fusion as a standalone platform into a really significantly large market for IoT platforms. So hopefully that's given you an insight into what we do and a bit of an update from the last 3 months. So thank you very much.
Well, thank you very much indeed, Alastair. Well, they were 4 fascinating presentations. I know that there are a number of questions that people have got. I'd just like to assure everybody who sent in questions and comments in advance that they have all been seen by the board and management of Tern. So if they're not directly answered now, they have been considered. And I know they were considered in board deliberations earlier today. But I'll now hand over to Ian, who I think you'll want to make a few comments before we move on to questions. Ian, you're muted.
Sorry. Yeah, I'd like to make a few observations. Before Tern, I've been part of 4 different early stage investment companies. Normally, these companies invest in businesses that are at an early stage, businesses that are quite small and immature and haven't yet either properly developed a product or channels to market. And that's the case of all the companies in Tern's portfolio. When we've invested in these companies, there were typically 2 or 3 founders. So it's quite typical for many of these early stage investments to fail, and a 40% success rate in a portfolio is regarded reasonably good in the circumstances. By contrast, we've created a portfolio where 80% of our companies are not only surviving, but they're thriving. Our metric is significantly much better than other venture capital companies. We've had 1 exit in Wyld, which you've just heard about, which is well on the way to break even, and a very, very hot space in the fast-growing low Earth orbit market. Device Authority and Fundamental VR are now syndicated with specialist growth capital VCs. These are VCs who understand that market, or their particular markets, and they're aiming to grow these businesses into substantial businesses, and their ticket sizes are 10 million plus. Talking Medicines is now established in a category of market-specific AI, a sector that's achieving 50x return multiples of revenue. Now, we are sitting at a market cap of about 7.2 million. At the current share price, we're very, very seriously undervalued. It really doesn't begin to remotely represent the inherent value of this portfolio. We see what people put in chat boards, but we're not in the entertainment industry. We're in the value creation industry. And the issue is not about our operating costs. We're very lean. In the last year, we've cut overheads by 40%. We've cut our management team in half. We've moved our office to a cupboard to save costs. Our focus, which can't be cut, is about supporting the companies, and Tern's efforts are geared to remaining a major participant in helping these companies prosper and return significant value in a liquidity event at the appropriate time. Our shareholders will share when value is realized, and we'll always aim to maximize the return to you, our shareholders. And that's the goal that drives us in everything we do. So that was my kind of...
Well, thank you for that, Ian. And it does address some of the points that people have been making. But just to pick you up on a few points, and this goes directly to the questions that we've had asked during the session today. Questioner says, fantastic presentations, but it's apparent, or his view is that these portfolio companies don't need any material input from Tern anymore, and therefore you can cut the team even further. The team is twofold. It's the board, I can comment on the board because a UK PLC can survive with 2 directors, but to be appropriate for the AIM rules, really 3 is an absolute minimum. I sit on the board of 2 public investment companies, and one's got 4 directors, the other's got 5. But going to the input into the portfolio companies, do you want to comment further on that, on what's actually being done on a day-to-day basis?
I'll take that question, and as you heard today, thematically in the presentations, and Darron specifically pointed it out, that AI has become important, and Ian just presented the fact that we're early stage investors who really focus on product and product market fit. So, to be frank, I and Bruce have not been busier than we have been in the last 6 to 9 months as we've helped the companies adopt and take on the AI positioning. And this comes from the synergistic portfolio that we talked about. When you talk about 1011, 1011 is all about outbound marketing and creating outbound marketing interest. These are very expensive growth capital areas that require a different kind of venture capital business. We support the companies from a product market fit basis. We're bringing in syndicated investors who are now supporting the growth capital required, that have foundations, they have places where they market, and seminars and outgoing marketing events that showcase their companies. We don't have the capital to do that. We have the resources that know how to make products. We have the resources that know how to make product market fit. And our companies, I think, reflect the success of that endeavor and that the work that we do. And our networks are focused in those areas. So I think we're busier than ever in bringing the new technology and new market opportunities for the products that exist today as a basis of what we do and what we do to support you, our shareholders, because by doing so, we maintain an important relevance and a seat at the table that will protect us in providing you with a sizable return when we exit these businesses.
Thank you for that, Al. Yeah, I think it's pretty clear there, that there is a lot going on day to day. And is it right to say that, that input that's being given on a day-to-day basis is crucial to protecting the Tern positions in these companies? Because without capital, you've got to offer something.
Absolutely. Venture capital investing is a full contact sport. It's like union rugby rules in Australia. I mean, just about anything goes. And there are so many tricks and preferences and different classes of shares and things that can get structured behind the scenes, that if we're not at the table and we're not creating value, we will be slowly and painfully eliminated from participating in the business. And this goes beyond money. This is just because of greed. The more that someone can grab from the table for their investors, they're going to do it. So we spend a considerable amount of our time making sure deals are structured in such a way that our shareholders are protected on the returns, because that's the area that is a black art in venture capital.
And you mentioned, obviously, the goal is to returns to shareholders through liquidity events. Tern now has minority positions in all of its portfolio companies. Does Tern have the freedom to sell those positions as and when it sees fit, or do other shareholders have a say in what we do?
Generally speaking, the way the share purchase agreements are structured in these investment rounds created, the investor majority, that is the professional investors, not the company, make the decisions on who can play and who cannot play. And again, that's part of this black art of making sure that when these purchase agreements are put together, there is an opportunity for us to make sure that we're treated as an equal rather than as a stepchild. And if opportunities present themselves to do things to us, we still will be required to seek investor majority to secure anything that we would like to do on our own. So it's it's a check and balance within the investment agreements that exist within these companies that we're part of.
So there are those checks and balances, but ultimately, there is still the ability to be.
Oh yeah, no, there's a realization opportunity. It has to be in balance with everybody else, and then it makes sense to the whole group rather than just us by ourselves.
But our co-investment partners are also very keen to ensure the right kind of liquidity events. So, we're all in the same boat. We're all trying to, realize value.
Yeah, greed is the common denominator.
Well, and obviously the value of these companies is coming across, particularly to some of our larger shareholders. And I've had one or two mention to me, would there be an opportunity for them to participate if Tern was selling, or companies were looking to raise further funds?
Again, as we said earlier, it would be ideal to do something like that if, in fact, the investor majority would be so inclined. And again, we would make a hard case for that because that would be a preferred outlet.
And really, I'm conscious that we've been going for over an hour and a half, and we've kept 95% of the attendance, so we're going to have to wrap it up pretty quickly. But just as a final comment, these are all growing companies. Are you comfortable with their current funding needs and the fact that they have sufficient funding for current requirements?
I think at this point, everyone is funded to give them runway through at least to the second half of the year, if not in most cases for this year and next year. So the problem we face is if they become really successful and grow faster than they're forecasting to grow. And again, the prospects that you heard at these companies are pretty strong. So stay and watch this space, but at the end of the day, there is capital that has been deployed with these recent fundings that is enabling the companies to continue to move forward.
Thank you. Well, I think we're going to have to wrap it up there, and apologies to answer the questions that have been submitted tonight, and hopefully covered the areas that people have been questioning. But as always, if you've got anything further, please get in touch. Contact details on all the announcements, turn@investor-focus.co.uk. We will endeavour to put a recording of this session up on the website as soon as possible. For those who haven't had the opportunity, please pass on those details and on bulletin boards and things, and make sure people see it, because we want to share the fantastic opportunities and growth that these companies are enjoying, and hopefully, and I'm pretty confident that is going to be seen as a return to Tern shareholders in due course. So thank you very much to all the presenters this evening. Thank you, Darron and Alastair in particular for joining us live. Joe and Richard for your videos, but most of all, thank you very much to everybody who's joined us this evening to participate and watch the presentations. Thank you.
Thanks very much.